everybody. Michael, Reader CPA here, owner of Reader CPA Group. Today I wanted to just talk about some, life events and their tax implications. There is a portion of the market that thinks that like tax return preparation is just like this thing that is the same every year, and that's not true. If there's one thing that's a constant in life is that there will be changes, and those changes will affect your income tax return preparation. We're in 24 right now doing 2023 taxes. Like, did anything happen in 2022 that's not applicable to 2023? And did anything happen in 2023 that's not applicable to 2022? I always ask that question because if I'm only looking at the prior year tax return, then that's assuming that the current year tax return is going to be the same as the prior year. Well, what if there was a life event in one of the years? What if there was a marriage? And if you're single, then you're single. And if you have a fiance, then you and your fiance are still single, filing separate different tax returns, right? So like up until that point, you're either filing as single or head of household if there's a child involved. But once you're married, you're married. And so when you're legally, there's common law marriages, but when you're legally married, then your only filing options are married filing joint or married filing separate. What if there was the birth of a child? What if there was the adoption of a child? Now all of a sudden, if you're single, now you're head of household. Meaning like if you're not married on paper, you're head of household. Or if you're married, then there's then there are whether you're single or married. Like if there's a child, there are now child tax credits that are eligible. What if the kid's going to daycare? There are dependent care benefits that are now available that weren't, when the child wasn't going to daycare. And then the dependent care credit even extends to other family members. Like if you're taking care of an elderly parent or grandparent, for example. And so these are things that may have not applied in like prior years, but now like a certain life event is going on in your world, and so now like this affects your income tax situation. If you were to adopt a child, there is an adoption tax credit out there that so beyond just in the year of beyond just now all of a sudden these other tax credits like child tax credit and dependent care tax credit, there's now potential for adoption tax credit if you adopt. If you have kids in school, if they're going to college now, you can now be eligible for education tax credits. For all the tuition that you pay for their school, whether you're paying out of pocket or you're paying out of a 529 plan. For there were real estate, purchase, three big life events, right? Are you get married, you have a kid, you buy a house, right? It's like what if you bought a house one year, you didn't buy? What if you bought investment real estate or sold investment real estate, et cetera, et cetera? What if there was a big capital gain event in 1 year? What if you get divorced? If you get divorced, your tax situation is going to change big time. You were married, now you're not married. Are you single or are you head of household? And how are the assets being divvied up? Who's going to stay in the house? And is one spouse going to have to buy out the equity of the other spouse? And when settling, who's going to live in the house, and like who's going to keep the house and who's going to leave and not be in the house? Are there any joint assets that need to be split? And then so they're like that one account where they're held is now going to have to a chunk of it's going to go out and go into another account, and then the other spouse is going to have to report that on their tax return. What if there was a death in the family and there's what if there was an inheritance? You were the beneficiary of all or a portion of their estate. If there's retirement assets, you may be required to take required minimum distributions from the inherited retirement asset that you inherited. And if that wasn't the case in the prior year, then that's obviously going to throw a monkey wrench in like what was like the normal drill of filing your taxes each year. And so like what if there's a major medical issue one year because there's an income limitation. And a lot of times it's common for people making six figures and above, and even like high five figures to not qualify for deducting any of their medical expenses because it doesn't exceed the the threshold, the income threshold, and so that could not be the case one year. And so it's like I hear all the time, Mike, is it worth for me to tally up all my medical expenses? And a lot of times, no, it's not, because they're not going to get credit for it. They make too much money to get credit for it, and or they're going to take the standard deduction instead of itemizing anyway. So, but there are years where there was a boatload of medical expenses for one reason or the other, and so that could justify taking the time to add up all of your out-of-pocket medical expenses, because you're going to get a tax break for it. So I mean, life events, right? Like, what if your spouse passes away? If your spouse passes away, then you're no longer married. You're either single, or if you have dependent children, you can qualify as qualified widower for a couple of years after the year of death. If there's one thing that we can count on in life, is that changes are going to happen. Nothing's going to stay the same, and so the same goes for your tax return preparation. And the years where these types of life events happen, could result in your tax return preparation being more complicated than it normally is. And so that's why over here at Reader CPA Group, we bring these things up in conversation. If you're not thinking about it, we lean into it with you. If any of these applicable things are going on with you and you have questions, we unpack all of this stuff and make sure that that you stay in compliance, and we don't leave any stone unturned when it comes to optimizing your tax situation. So, here's to enjoying all of the joys of life, like the birth of a child, or getting married, and buying a house, and then there's also the other unfortunate parts of life, like death, and when relationships don't work out and end in divorce. That's life. There's highs and lows to it. Enjoy every day, and every day is a blessing. So, all right, everyone. Michael, Reader CPA Group. I hope you're all doing well and have a great day. Talk to you soon.